What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. So let's dive into Bitcoin here in the weekly time frame. Right now, you can see we've had this pretty solid appreciation in price coming off of this higher low right here versus our low that we had here in June. So this one here got down to 28,796. This one got to about 29,250, and now we have come up and we're operating above the R1 resistance level here. If we close above that this week, we could expect a move up to the R2 pivot at some point over the next few weeks, because there's really not much resistance here on the weekly time frame. It's pretty much, these two candles just, the bodies are going through this zone. So pretty quick movements through this kind of gap in prices of about 38,000 up to about 46,000. So what propelled price up? Well, there was a few things. One, there was a lot of people going short in this range right here. So once there's a lot of people going short and there's really not many more market participants that can go short, what happens is the price doesn't move very much because everyone that wants to go short already is short, and so therefore the price won't continue to really go down much because there's no more people to push it down. So what happened was the whales in the market started to push the price up because they knew if they do, it's going to cause what's called a short squeeze. Now this is something I explained in a few videos ago, which is basically this concept of a lot of people are going short in an area, and what happens is when the price starts to go up, they're forced to close out their positions as it goes up incrementally, because if they don't, they'll just continue to lose money. So people are either getting stopped out of their positions, and when you're in a short, when you get stopped out, you're forced to buy the position back. That's what a short is, right? You're borrowing money to sell that asset, and then you're buying it back at a later date, hoping that the price is cheaper so you can pocket the difference. But if the price is higher than when you sold it, you're losing money, obviously, because you have to buy it back still, but you buy it back at a higher price. So what happens in a short squeeze scenario is a lot of shorts are forced to close out their shorts at the same time, or they force themselves to get what's called liquidated, which is where their entire accounts are used by the exchange to cover their losses, and therefore they lose all the money in their accounts. So that's what happened on this rise in prices. Some people got liquidated, and some people were forced to just close it out manually or get stopped out, and it caused this rise in price as that adds on to the buying pressure. All these people getting stopped out, liquidated, or just manually closing their positions on the short side adds all that buying pressure and causes the price to go up, and that's what we've seen here. So now let's look at the lower time frame. So if we look at the 3-day time frame, there's the interesting thing here is we blew right through this red potential resistance zone here, and this 3-day candle closes in 1 day and 4 hours. And if we close above this red zone, this will turn into a support zone for price on a retest, because we had our bear trend here, and then once we confirmed it here, we pushed right through this zone and did not reject off of it and closed above it. And now because of that, if we come back into that zone at some point, it will likely be support. So if we look at this from a 2-day perspective, the 3-day perspective, one other thing I wanted to say was this resistance zone up here. This is where I would expect a monthly lower high to be set, and the reason for that is because this is an area that has clearly been tested twice here as support, and now we've closed below it. So this is just classic support resistance flip zone. This will likely be resistance on a retest, and this zone is the candle from March 2nd that goes from 47,000 roughly up to about 52,700. So that's the area that if we come up there, it's near that weekly R2 pivot that I talked about, which is right around 46,300. So it's right about here. So really anywhere from the bottom of this wick up to about 52.7 is going to be the main resistance zone on this rise in price on these higher time frames. From a 2-day perspective, the interesting development here is what's going to happen in 1 day and 4 hours for that candle close, because right now we're operating above this resistance zone that we tested here and here before this drawdown. So this is our candle back here from June 10th, where we had our bull trend. We closed 2 candlesticks above the key high, and then we pushed right through this zone. So when we came in to retest it here, we rejected off of it, and now we've closed above it once. So now we need to close above it one more time to confirm that this is actually closing above this level and not just faking us out with one close above and then one close back inside. And then we'll see this likely turn into a support zone for price that may propel price up to that gray level up there at about 47K. On the daily time frame, we have another level to keep an eye on, which is we're 3 hours away from seeing turn into a support level, and that's this gray level daily candle back here from June 12th. So you can see this, we're in a bull trend right here with a low, high, higher low, higher high. Then we pushed right through this zone, came back, retested as resistance, and now we've pushed right through it, and we've closed one candlestick above it here yesterday. So if we close today's above it as well in 3 hours, this will likely turn into the main support zone for price if we do start to draw down, and that's from about 37.5 down to about 34,600. So that's what we're looking at there. In terms of daily resistance, we don't have any 1, 2, or 3 day resistance levels from anywhere from where we are now up to that $47,000 level. The only daily resistance levels we have are these pivots, which right now the R1 is up here at about 41,300, right at basically this high from June 15th. So that's an area for a potential rejection if we do end up getting up there over the next few days. But right now, V-shaped recovery here. All bulls over the past, I would say, this is like over a week. So all bulls here. So now it'll just be a matter of what happens next in terms of the trend. Likely will form a higher low somewhere, considering our previous low was at 29,200. So the buying opportunity is really trying to catch that higher low. And where is that going to be? In my opinion, if we close today's candle above this gray zone, it's not going to be anywhere below that candle's low, which is at about 34,600. So that'll be the area that will potentially look for price to bounce off of if we do close this daily candle above. A couple other things to note: this super guppy daily level, these daily exponential moving averages, which is what this indicator is comprised of. So this indicator is really two sets of exponential moving averages. And if you don't know what an exponential moving average is, it's essentially just a faster version of a regular moving average, which is an average, exactly what it sounds like. It's a moving average of the price for the previous period. So it's a basic calculation where you're taking an average of a period in the price's history and then drawing a line for that, and it moves. So that's what these lines are. So the red lines are the slower EMAs, meaning that they are longer. So they're if the dark blue EMAs are the faster EMAs, so they're shorter time frames. So they react to price action a lot quicker. But these ones are slower moving because they take a higher period of time. So it'll be like 100 or something. Let's just look at the settings and see what they are actually. So yeah, they go up to, so you can see slow EMA 1 starts at 25. So it's taking the previous 25 periods, and then that goes up to 70. So those are the higher time frame, the higher EMAs. And so they're what we consider to be the investor EMAs. So when we're looking at the super guppy, investor EMAs are these slower EMAs because those are the areas where investors are going to be looking to enter a position, because they're not focused on making trades. They're not focused on these shorter time frame EMAs. They care about the longer time frame EMAs. So you can see that clearly this is a valid breakout here above these EMAs, considering that these have suppressed price, for at least 4 tests before we've now finally broke above them. So that's great news for the bulls, to get 2 candle closes above this already. So now if these roll back into being in the position of this, where you're seeing the longer term EMAs below the shorter term EMAs, you get this most bullish scenario where the green EMAs turn into support, and the light blue is also support, but they're faster, so they don't provide as much support. So really all I care about with this indicator is these longer term EMAs, and what color they are. So when they're red, they're very bearish. When they're green, they're very bullish. So now that we're closing above that, great confluence there. The other good news for the bulls is the Ichimoku Cloud here. We totally negated this Kijun rejection here on this candle from July 25th by closing above it. And then as soon as we closed above it, all of the cloud traders closed their positions. That helped further add buying pressure to the rise in price. And now we're currently operating inside of this cloud. So that's good news as well for the bulls. All right, lower time frame. So let's talk about this 8-hour level that we talked about yesterday. So this 8-hour level is from back here. This is from June 17th when we had our bear trend. Had a bear trend, last up candle here before this down move. We look over here, acts as resistance. Now we push above it. We close 2 candlesticks above it here. We come back into it, and we have this bounce here. So now it's a matter of, are we going to continue to bounce off this level over the next 3 hours, or are we going to reject this as support and push back into the zone? The other resistance zone to keep the main resistance zone in between the light blue zone here, the weekly support, and then the 3-day resistance, the gray resistance up here, is really this 12-hour resistance level back here from this bear trend right here with our high, low, lower high, and then lower low. So this yellow zone right here is this white candle right here from May 18th. So that candle goes from about 43,200 up to about 45,800. So that'll be the main area for potential resistance if we do end up continuing to rise in price up to that zone. Volume analysis tells us that right now we are looking at a potential, we already have confirmed the bearish divergence in the RSI with a higher high in price but a lower high in the RSI. People are selling up here. You can see that based on the increasing bear volume up here, the above average bear volume. So that's something that I'm keeping an eye on. Right now, the only zone that is a fresh support zone for price is this little purple zone down here from the 4-hour, which starts at about 38,300 and goes to about 37,300. So that's what we currently got going on Bitcoin's price action. I hope this analysis was helpful for you. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Leutheria.com. This is where you can learn all of the foundational elements you need to get started generating consistent profit trading crypto assets like Bitcoin and others. You'll learn things like candlestick analysis, volume analysis, and a ton of other things as well. The other thing is our Leutheria Signals Discord channel, which is where you can get 24/7 unlimited access to all of our trading ideas related to Bitcoin and Ethereum every time that we post them. So if that sounds like something you might be interested in and you'd like to start trading some of these assets like an experienced trader like myself, you can get unlimited access to all of my trading ideas related to these assets. by subscribing to Leutheria Signals. So to find the information for that, you can send an email to team@leutheria.com. That's also in the description below as well. And then we'll send the information over to you to join that group. We would love to have you in there with us. And until tomorrow, onward and upward.